A very good afternoon and a very happy new year to all of you. It's a pleasure to come back again with our Google Hangout, the Demystify series. If we watched last year, our focus was on hardcore insurance products, on hardcore looking at general insurance industry as a whole. This time, while I was talking to my friends, what I noticed was that each one of us was obsessed with how do we create wealth. What do we do? Where do we invest? The India shining story is coming back again. So do we buy shares? Do we look at investing in real estate? And while all this conversation was happening, in my mind, it just flashed back to me that just a couple of months back, we had this flood in Jammu and Kashmir. It was a huge, devastating flood. In fact, it was hell in heaven. And that is how it was. Water was there up to 24 feet of level for 7-8 days. We were the leading insurer in Jammu and Kashmir. Our market share was about 23% there, which actually meant that we had the maximum of claims. At that time, our people flew in when nobody was actually going to Srinagar, and they didn't have anything to eat. They survived on biscuits and water and settled over 20,000 claims and paid over 800 crores of claim, much more than any other company. Sounds good, but the reality was it still touched a small segment of people. Quite a lot of them were not insured. So here we talk about creating wealth, we talk of working hard, we talk of investing, we talk of buying assets, and we are working hard all our life to create this wealth bit by bit, bit by bit. One instance, and this flood I heard was after 80 years or 100 years, one instance, entire hard work is gone. Have you ever thought of general insurance as a wealth protector? So while we work to create wealth, we should keep on protecting that. Our hangout today focuses on this, and for this we have in the panel some very senior experts for you. But as usual, I'll start with my customer first, because for me, customer is everything. We have Mr. Majid Jahangir, who is from Srinagar, and he is a BE in electronics and communication. He's an entrepreneur for 18 years, and he's providing lighting solution. His area includes Philips, Havells, Fromon. He's also an M&M service franchisee and authorized dealer for Nokia handset for South Kashmir. He has 5 policies with us, which includes office package, fire and elite perils, 2 godowns, householders, and 2 of his godowns were located in an area which had floods. Even his house was partially damaged at that point in time. It's a pleasure having you here, Mr. Majid. It's so good to have you here.
Good afternoon, Mr. Tapan and rest of the panel members. It's a real warm feeling to be here with you in this biting world of Kashmir, and it's really nice to be a part of this high-profile panel. I am highly indebted to Bajaj Allianz Insurance Company Limited for inviting me and giving me this opportunity to be here and exchanging my views in this high-profile panel. I'm sure that as the session progresses, I'll be much more aware about insurance-related affairs. Thank you very much.
You are the voice of customer, Mr. Majid. So any customer asking us any question, I think I'll be referring to you as for your opinion to see how you think about it and what would be your thought on that. Moving on, I would like to welcome Mr. R.K. Shah. He is part of the Jammu and Kashmir Bank, one of our oldest business partners. In fact, I remember those days when it was very difficult to do business in Srinagar, and we had set up this relationship then in May 2002. Mr. Shah has been of great support to us. He's been also heading insurance for quite some time, and a lot of his guidance and vision has been there. And for those of us who are not aware, I think in the field of bank insurance, the Jammu and Kashmir Bank is a success story which people try to copy, but I've yet to see somebody copy the kind of success that Jammu and Kashmir Bank has in terms of bank insurance. We're thankful to have Mr. R.K. Shah here with us, who is the Senior President for Technology Information System and Law from Jammu and Kashmir Bank. Welcome, Mr. Shah.
Good morning, Mr. Tapan and all the participants on the panel. Yes, it's a privilege to be here. I think after the privatization of insurance, wonderful things have happened. The market share has increased. Competition is there. But somehow I find there has to be revamp of the processes and strategies followed by insurance companies. It's, I believe, unfortunately, it can be a good opportunity for insurance companies, including Bajaj Allianz. The tragic flood situation in Kashmir. There is no more awareness about the people that, look, if we had covered this risk, we would have been compensated. We have collectively failed in creating this awareness, because if we go to the root cause of it, when the insurance business was started in the country, I would say LIC for life insurance, general insurance, nationalized for companies. The life insurance agent would go to a customer and tell him, look, through this policy you can avoid payment, you can save taxes. Yes, then it was also explained that after the expiry of this period, contracted period, you will get your basic sum assured plus some bonuses. Means it was not sold as a policy for covering risk of death. Now, once we were so complacent in selling life insurance, the complacency in selling general insurance is more. Srinagar or Andhra tragedies can help you in covering this, in increasing your market share. But I believe everybody has to be made conscious. That's what I say. There has to be revamp of processes and strategies followed by insurance companies. Once we work in a bank, we are supposed to cover insurance of properties which are held as security, whether it is hypothecated or mortgage. Although in the loan documents, it's the bounden duty of the customer, borrower, to do it. But you have to see the difficulties that even the bank managers face. If there is a borrower whose stocks are 10 lakhs, his limit is 10 lakhs, stocks may be 20 lakhs. Even if you talk to him, look, you are not covering your stocks fully, he says, no, why should I cover it? Already I am under pressure, I have covered for 10 lakhs. I will say good number of educated people in this Kashmir tragedy I have noticed. They had taken third-party insurance for their motor vehicles. I believe there is a time we completely do not sell insurance products with third-party coverage only. And second thing, there has to be a major connect between sales lines, because we say this is an insurance product, it has these features, and we have made it a bit complex. Till recently, I was not knowing that a policy issued with this fire risk cover also covers floods. I believe as consumer, it can be made simpler. I don't think it is any rocket science. There are basic risks, there are basic products. That has to be made simpler so that it can be understood by a common man. And what can be done for making insurance, I would say, attractive for the customers is that you have to showcase. It's a tough time for Bajaj, it's a tough time for all insurance companies for how to make a settlement of claims for substantial amount. But at this time, you can showcase some success cases. There would be people who will not be happy with the way you have settled their claims or the manner in which you have settled their claims. Again, please don't blame them, because we have not explained to them that you have to assume these responsibilities, then only we will be able to cover your risk. Moving forward, we will have some more discussions on it. Thank you.
Thank you, Mr. Shah. I think you raised very important questions. I think the first thing which comes up is the low penetration rate in India. We just have a 0.78 to 0.80 to GDP, one of the lowest in the world. And the second point is our customer awareness. And this is precisely why we do this Demystify series. As a company, I think we try to reach out to customers and see how can we be there with them. And the role of banks also in propagating and creating this awareness, because you also one which creates a lot of assets for people. So I think you've touched all these 3 points, and we shall be taking it more as we progress further. But thank you, Mr. Shah, for the enlightened words that you had on this. Moving on, I move on to Mr. S. Srinivasan, the Chief Financial Officer of Bajaj Finserv Limited. The reason we have him on the panel is about his varied expertise and his different work profile that he has been handling through. It's very interesting, he is a Bachelor of Science, but he's also associate member of the Institute of Chartered Accountants of India, and he's also a graduate member of the Institute of Cost and Work Accountants of India. He also holds a postgrad diploma in management from Indian Institute of Management, Calcutta. He's a charter holder of the CFA Institute, USA. Wow. Now, in 29 years of work experience, he has had different experiences in India, Middle East, and he has also held senior positions in a lot of companies. But the most interesting one was that he was a CFO of Bajaj General Insurance company also for some time, which makes us very happy about this. And then he moved on to become managing director of Greshma Shares, and then president finance of FinServ, and now the CFO of Bajaj FinServ Limited. A pleasure having you here, Srini. Your initial comments as we progress further.
Thank you, Tapan. It's always a pleasure to be with Bajaj Allianz and to also talk to a lot of customers. I was just doing some, I will start with a bit of anecdote. I was just doing some Google search, and I saw that an old Financial Express online article, which in 2010 estimated that the astrology industry is worth about 50,000 crores. At that time, the general insurance industry was less than 20,000 crores. If you look at personal insurances like car insurance and health insurance. So clearly what struck my mind was people are willing to pay twice as much to know that something may go wrong in their life than to do something about protecting their risk. This was really an eye-opener for me. The other thing is, I have worked many years in general insurance, almost 25 years. And to tell you the truth, we are the only people who wake up every day morning and pray that nobody should fall sick, nobody should have an accident, there should be no floods, there should be no drought. So we are actually good people. We actually pray every day that nothing should go wrong with any of our customers. So having given this background, going to more serious stuff, I think when you look at wealth creation, clearly people think of actually earning a lot of money, investing it, making it grow faster, maybe beat inflation, maybe become rich. I want to become a millionaire, billionaire. That's fine. But there is a catch to it. The first thing is you can only invest what you have. So you got to earn a lot of money. And I think the majority of the people do not get the kind of opportunity to make that kind of money which they are able to save. Even if you look at very wealthy people like Warren Buffett and others, I think most of the reason why they are wealthy is because they have avoided the big losses, not because of the right decisions they made. So many people make right decisions, but they also make so many wrong decisions that most of the wealth they have created through the right decisions get wiped out in no time. So clearly, avoiding losses is very important. And to create wealth, you have to take a lot of risk. If you look at our own stock market, people who are on the investing mode, in 2008, the stock market was at dizzy heights. In 2009, it was down 2/3. So if I am a professional salaried person who had put all my money in the stock market, overnight, my wealth has depleted by 2/3. What I earned over 10 years could have got wiped out in a couple of months. So clearly, one needs to manage risk, and there is no substitute for managing risk than insurance. I'll give another example. I mean, today people go a lot outside, they go with their families, they go to malls, they see movies. When you go to a movie, you spend 500-600 rupees on the ticket, then you will probably go to the food court. You end up spending 1,000 to 1,500 rupees on a single day's enjoyment. Do people spend even 300 rupees a year on insurance? I doubt. The per capita spend on insurance in India is about 400 to 500 rupees. So people are willing to spend 3 times or 4 times as much on a single day than they have. I mean, I'm talking about 500 rupees a year. That is 50 rupees a month. So clearly, a lot more awareness has to be there that people end up losing a lot of the wealth they have accumulated because there was a flood, there was an accident, there was an air crash. Anything can happen in this world. And the job of insurance companies, we can't obviously avoid any of these incidents. We can't make sick people healthy. But what we can do is, God forbid, if such an event happens, we can help you alleviate the financial burden that may be posed on you because of that. Insurance traditionally is never a way of getting rich. It is only a way of preventing you from becoming poor. And clearly there are so many incidents. If you look at, I know in 2005, in July 25th, if I am not mistaken, in a single day, there was almost a meter of rainfall in Bombay. I think houses were underwater. People had to walk 20-30 kilometers to reach their house, and most of the city was under several feet of water. In many flats, I believe, if you look at the old TV news and the live shows that they were broadcasting, you will find that even fridges and washing machines were getting washed away in the floods. Unfortunately, our experience then was that a significant proportion of these flats did not have insurance for their home contents or for their houses. The amount of damage that would have done financially to those families, we do not know because they did not insure. We have no idea, but we can assume that it is quite significant. The other aspect of insurance is people tend to look at it as buying a product. It is like buying dal and sabzi. It is not. I think I would ask hundreds of people, how many of you have changed your banker over the last 10 years? I think the answer would be a small fraction. And that would be because they changed their house, there was somebody else nearby, but never for a reason that every year I have to renew my relationship. Let me look at 5 bankers, let me take quotes, let me see who's offering the highest interest or the lowest interest for a loan, whatever. Unfortunately, in insurance, everybody seems to be shopping around. I think people need to look at, if you are looking at risk, I think there are some risks. For example, I'll take the case of health insurance. Clearly, someday people will fall sick. The question is, we don't know when. It could happen earlier for some people, it could happen very much later, and some people may never fall sick in their lifetime, which will be a small fraction. When that happens, are you prepared for it financially? That question people don't like to ask because it is not a pleasant question to ask oneself. Having said that, I think people need to look at it as a lifetime investment, that someday when this eventuality happens, I need to be prepared. Maybe at that time, because of inflation, whatever I estimated may be much higher than what it is today, but having something is better than nothing. So clearly you need to build a long-term relationship with your insurer. If you buy your car insurance from A and your health insurance from B and your accident insurance from C, you will end up with having a box file full of papers with various renewal dates, and actually you're not getting much value. Whenever I talk to a lot of youngsters, many of them work in companies, BFSI, in IT, ITES, they would say, we have got insurance, our company is providing insurance, they're providing 1 lakh rupees of health insurance. Many of them are young, but if you see the statistics, they say that now a lot of the lifestyle related illnesses like diabetes, hypertension, even heart related illnesses, a lot of the youngsters are getting it now than before because of the lifestyle. Work hours are longer, people are spending a lot of hours on the computer, people exercise much less, food habits are not disciplined, and so many reasons. So clearly the importance of needing to protect oneself against illnesses, against accidents is a lot more. In 2005, we had Bombay floods. We had 26/11, which is well documented. We had Uttarakhand last year underwater. This year, Jammu Kashmir is underwater. We had cyclone Hudhud. So every other year now, the frequency of disasters is increasing because of global warming, some people are saying. But whatever be the reason, I think it is becoming a lot more important that at least financially, people should need to protect themselves, and there's no better form of wealth creation than you start wealth creating by first protecting what you have. You don't start growing it before you have a means of protecting it. Finally, on tax benefits, I think there's a lot of savings related instruments people buy because tax benefits are available. Today, up to 15,000 rupees of health insurance premium, you get a tax break. That means 20 to 30% of your premium is actually subsidized by the government. But when you look at the average premium paid by individuals for their health insurance, it's not more than 2,000 to 3,000 rupees. So clearly you're losing an opportunity to build a lifetime value for yourself, of which the government is supporting with tax breaks, and the insurance companies are very keen to offer you products with multiple coverages. So these are generally the broad perspectives of how general insurance can actually help you protect your wealth, and that becomes the basis for growing your wealth. That's about it as an opening remark from me, and I'll hand it over to Tapan.
Thank you, Srini. I think the most interesting part which we found was the research that you did. The amount of money spent in trying to find out what can go wrong is much more than the amount of money spent in trying to protect if something goes wrong. I think that's a very interesting thought process, Srini. Thank you for that, and also for the fact that the cost of protecting all your wealth is hardly anything. Like it's less than a couple of meals is what Srini mentioned. And finally, in terms of how to look at the insurance portfolio is something which is there. Very valuable thoughts from Srini. I move on to my Chief Investment Officer, Ashish Goel. Now, why I thought I'll get the Chief Investment Officer, because he creates wealth on the bond market and stock market. He controls about 7,000, 10,000 crores of rupees in terms of creating wealth for the company. At times, I think he creates more wealth for the company does from the underwriting that it does. So I thought I'll get somebody with the perspective who is in the true terms into the market in terms of creating wealth as to what are his thoughts in terms of protecting wealth. Ashish, welcome to the panel.
Thank you, Tapan, and I'm really delighted to be on this panel with this esteemed guest here. My view on the creating wealth, which I second most of the thoughts which Srini has already mentioned, is that there are two ways. One is wealth creation, which happens to stock markets, bond markets, which happens to real estate, which we look more passionately, and we try to create wealth over a period of time for our retirements, for our future savings, for our kids. But sometimes we while creating wealth, we forget about protecting wealth. That's where the topic is very apt, that general insurance for the wealth protection. So when we when we look at the companies into our markets, and when we see especially the small businesses, many times we find that the insurance coverages are either inadequate or they are not properly covered, like the loss of profit policies are not there, and we don't see the proper risk management to ensure that if the eventuality happens, whether they are properly protected for taking their business a step ahead. Many a times they lose market share when something unfortunate happens to their businesses, like floods, earthquakes. In one of the businesses we saw that the person is saying that we are not in the earthquake prone area, and last 50 years we have never seen an earthquake, so why should we cover for ourselves for that kind of insurance? And suddenly that unfortunate event happened, and he has lost his property, he lost his market share, loss on profit. So when we look at the wealth creation, we also need to look at how to protect that wealth over a period of time by buying appropriate general insurance policies, and try to create a framework where we can save for that in eventualities in going forward. Also, when especially in the smaller businesses, the capability to build again the businesses is very less in compared to what can happen in the larger businesses. So the risk management, what was right last year may not be right this year. So the continuous evaluation to come up with to ensure that we are very well protected and our properties are insured and properties are covered to continue doing our businesses is quite necessary. That is from my side.
Thank you, Ashish. And as an insurer, when I go and talk to my customers and try and talk about insurance, what I've always seen is the CFO of companies which take that decision. So I thought, why not get my CFO onto the panel and see what are his views from a CFO point of view, because they are responsible for the balance sheet protection. So I have Milind Chaudhary here, the CFO of Bajaj Allianz, with us on the panel. Welcome, Milind.
Yeah, good afternoon. Thanks, Tapan. Good afternoon, everybody on the panel, and I'm really happy to be part of this particular discussion. And I think Srini has covered very valid points as far as basic risk of wealth destruction is concerned. And along with that, Ashish also covered, Mr. Shah also has given some insights, very, very valuable insights from customers' point of view. And I think overall, when we talk about wealth protection, the topic of this particular discussion is that it is very, very important that wealth is protected in order to grow wealth. Creation of wealth and protection of wealth, they are not two separate topics. Particularly, unless the wealth is protected, it will not add to your wealth. So wealth needs to be protected in order to create more and more wealth. So I think that is very important to understand. And I think nobody will deny or dispute any aspect, particularly regarding the risk management, which is required in terms of our day-to-day lives. What happens is that risk management has become an integral part of our lives, and we are facing risk in each and every walk of life. So how do we manage this risk? There are actually multiple ways in terms of managing this risk. You can altogether avoid a risk. You can you can stop going on the road if you are scared in terms of accidents or those kind of risks which are on the road. But is that the way? There are few risks which can be avoided. There are certain risks which you can actually reduce by adopting certain risk management techniques. For example, you may be wearing a helmet or a seat belt while driving, or you may be installing some security alarm or a CCTV camera in your home. So these are ways in terms of you can reduce the risk. Then the third, the most viable way is only insurance, which is transferring your risk to somebody else for a very, very small premium. And I think many of the people who are still not actually exercising this particular mode in terms of risk management, I think they need to be aware that this is the most viable way in terms of transferring your risk to somebody else and who can stand in terms of a calamity and help you at least restore your financial strength when some calamity happens. So in terms of risk management, I really feel that insurance is the most viable way in terms of managing risks. And with this discussion, I would like to add particularly topics in respect of tax, or as the questions are coming, I would be happy to answer them. Thank you.
Thank you, Milind. In fact, I know that you have also worked in manufacturing firms and IT firm. There are some CFOs that I speak to, and they see that how can they reduce premium in terms of trying to save cost. So do you think it's a good idea to reduce insurance premium or cut covers to save cost in your balance sheet, or what would be your view as a CFO there?
I think as a CFO, when I am managing risks for my company, I think I never try to cut any corners. I try to take maximum coverage. I try to provide for every eventuality which is likely to happen. And I have to ensure that my business goes on, the business continuity planning, or in a way, another part of it, which is called the disaster recovery plan, which has to be in place. And insurance is the most important component of any disaster recovery plan. And I would urge that every person in his life also has to follow or have this disaster recovery plan, so that his life or continuity of his pursuits is not disturbed because of such untoward events.
Thank you, Milind. I fully endorse your view. I think that is why I thought I'll take this question, because the last place you want to save money is in insurance premium, because something goes wrong, what you lose is huge compared to what you think for saving. But I'll start the question answer discussion with, as usual, my customer. I said, for me, everything is the customer. So Majid, when I look at your policies, I see that you have taken 5 policies. You have taken for office, you have taken for go downs, you have taken for your own home. I think you are one of those rare customers who are very, very aware about what is the cover to be taken. And unfortunately, in Jammu and Kashmir, when the floods happened, your property was down under water for 20 days. And then the survey was taken and claims were settled by Bajaj Allianz General Insurance Company. One, I want to know from you, how did you think about covering all this risk? What was in your mind when you took an insurance cover? Because normally, if I go by historical facts in Srinagar and Jammu and Kashmir, I think there has never been a flood for 70, 80 years. But you're still very well covered. And then what was your experience with Bajaj Allianz General Insurance Company when the claim happened? What was your mind thought process, and what is the status now? Over to you, Majid.
Thank you, Mr. Tapan. I would like to share my personal experience with your company. When floods struck us in the first week of September, I think to be precise, it was during the intervening night of 6th and 7th September. And when we woke up on 7th of September, it was hell all around. We had floods all around Srinagar. And the first priority for me and for anybody else was to ensure the safety of our families. Once that was done, the second thing that struck my mind was that, oh God, whether my these stocks are still insured or not. I think the policy, is it still effective or not? Once that was also achieved, I just had one thing in mind, that okay, it's fire I have covered, but I never knew whether fire floods are covered or not. So there was a period of uncertainty for me for some time till the water started receding and I could approach Bajaj office in Kashmir. Once I approached your office, there was a huge rush of people. There was chaos all around, but I could see your people. They were treating people like in a very good manner. Like somebody came to me and asked me, "Where is your policy? I want to have a look at your policy." Once he had a look at my policy, he said, "Don't worry, fire is covered. Your flood affected things are covered. Don't worry, you'll get your this surveyor. He'll be there in 24 hours time." And I thought he's just simply joking because we don't have this kind of a professional culture normally in Kashmir. I thought it's going to take me another 1 week before any surveyor is deputed for me. And when I moved away from my this office, somebody told me the man who was talking to you and whom you had approached is basically the head of this Kashmir division, Mr. Ejaz Khan. I was really now. I thought no, it really gave me some heart that okay, now things can move. And within 24 hours, to my great surprise, I received a call from the surveyor. He fixed one appointment with me. We went to our godowns. We had detailed, we took photographs. We had a detailed look at my goods. So everything was destroyed because my godowns were underwater, under 15 feet of water for 12 long days. So nothing was saved. Like it was all total loss. I got a bit I started asking him, give me total loss because you can see with your naked eyes there is absolutely nothing that has been saved now. Then he said, no, you can't be so, I can't do it in a jiffy. I have to have my own way of working. You will have to do me a favor. You will have to segregate all these goods. I said, it's not possible right now. Look at the conditions in Kashmir. I can't get laborers. But he said, no, I cannot compromise on my work. If I have to settle your claim, I have to go through all the formalities I need to go through. And I cannot compromise on this. Then I understood. Being a professional, he was genuine, he was right. So I did what all he wanted me to do. I got the things segregated. He again visited my godowns. He again did all the formalities. Then he asked for documentation. Luckily for me, I had the documents which were in safe custody because my office was not affected by floods. I had to produce all the documents. He kept on asking for more and more documents till he was finally convinced. But later I realized, yes, it's his job. He needed those documents. He needed those documents to get my claim settled. Once I produced all the documents, the case went to your office, and I think no time my claims were settled, and my claims were settled to my satisfaction. I am grateful to your company for that. Because when I compare your Bajaj company with other insurance companies that are working in Kashmir right now, I feel most of the customers who had policies with other insurance companies, they're not as satisfied. In fact, they are unhappy the way they have been treated by other insurance companies. Maybe you also have a chunk of customers who are not satisfied with your working. But since I belong to this place and I have seen how people have reacted to these claims, I think a good percentage of people are more or less satisfied the way you have handled these floods. Now, my point is, this was a special case of floods. Had it been a normal case, had your company treated me as a customer in the same manner as I was treated during this floods? I don't know. Now, 2 points. One point Mr. Shah raised that nobody here knew whether floods are covered under fire policy or not. Why this gap? Why your insurance agents or insurance people don't make us understand when they come to us for policy? Why don't they tell us in detail what all is to be covered? Why was there this kind of uncertainty? This question I want to have an answer from you, sir. And second, Mr. Srinivasan said that people don't mind spending, going to cinemas, going to theaters, going to places, and spending so few hundreds or thousands. But when it comes to insurance, they don't want to spend on insurance. Now the answer should come from you, from the insurance companies. I think it's your job to see why it happens. At the end of the day, if people understand that no, insurance is equally important, it's both the customer as well as the insurance company which is going to get benefited. Now, why this gap? I don't know how to reduce this gap. The initiative has to come from the insurance companies. And third thing, When an insurance agent or an insurance official approaches a customer, the normal thing is that the customer feels as if he is going to be taken for a ride. He's not going to get any claim afterwards. So he feels very reluctant to enter into an insurance policy. I don't know why insurance companies are again. Is it? And he again feels like as if this agent he has some commission in this, and or he has to meet some targets. His job is that's why he's getting so this like what we call he wants to get this insurance policy through at any cost. And this I think these are some doubts which I feel should be cleared to you, but I'll be highly grateful. Thank you.
Thank you, Majid. I think very valid points raised once again, and that is something which we shall deliberate upon and look upon how to take it forward. I think two things which come out. One is that as a customer, you got your claim settled in 20 days time when the flood was there at that point in time. In fact, I was at the chambers of Jammu and Kashmir. And I was talking to the president there and secretary there in terms of what is their feel about how the claims and insurance company are looking at. I'm very happy to see that they were very delighted with the services of Bajaj Allianz General Insurance Company. And as I mentioned before, that settling 22,000 claims, and over 800 crores of claim amount to be paid. I think that should put at rest the thought that insurance companies don't pay. And you'll be happy to know, Mr. Majid, that I think about 60,000, 70,000 crores of claims get paid. In fact, general insurance industry has a combined ratio of 116%. Combined ratio means claims plus commission plus the management expenses is 116. If 100 rupees is the premium collected, 116 is the outgo for insurance companies. So insurance companies do pay claims. I think the issue is those who get their claims settled don't talk much about it. Those who have some issues are the ones which get communicated. But that is a weakness of insurance companies. They have not been able to propagate the thought process well. I think I do agree. But as a banker, Mr. Shah, how do you feel when you see that because of your efforts and your customers being insured by Bajaj Allianz, and when the claims happened, the company moved in pretty fast, settling 22,000 customer claims of your bank also, which also ensured that the NPS were very low for the bank because it was well protected from the insurance company. What kind of satisfaction do you feel? And what action as banker that you want to take, or the message that you want to give to your customer as a banker? Because I understand that a lot of traders who had a current account and they didn't have a loan with the bank and also had an agitation there in Srinagar saying that the bank should also look at insuring us also, and why did they not talk to us about that? So how do you feel as a banker about these issues, Mr. Shah?
A wonderful job done by Bajaj Allianz. We have open experience with them. The claim settlement process was very fast. But Mr. Majid made a point that had it been not these natural calamity of floods in Srinagar, this unprecedented situation, would the response would have been similar? I think we have to understand it from the customer's perspective. If you have settled claims, I don't know why you are shy of disclosing this information in more public platforms, so as to create an awareness among the customers. Look, if this insurance business, we ran also a risk, but we covered the risk and we paid these claims. There would be some claims which you find are not genuine. Say somebody making a claim for destruction of his property which was not located in flood affected area. Second, the immediate thing that is required to be done in this settle these claims. I mean, dispose of these claims. If they are genuine, pay them. If not, then tell them that, look, it cannot be paid. You got to, sell this as an activity. If we talk of that risk management as a concept, it has not, let me tell it openly, even in institutions, it has not penetrated deeper. It's morely on account of compulsion, on account of ensuring compliance of certain regulatory or internal guidelines. So if the penetration is low, I think Mr. Majid makes a point. It's primarily the insurance company's job to find out why it is low. So disposal of the claims wherever these are genuine, which you have demonstrated during recent floods, disposal of large number of claims, it has gone to your credit. But looking forward, I say you can capitalize on it, making customers heavier. And then again we go to the basic issue. If you have created an awareness about me, about managing this risk, are you then educating me sufficiently in telling what risks would be known? So there is sometimes a disconnect. That's what's happening in IT industry also, between sales and business. Now sales guy is in the technical divisions. Sales guy is at the most booking insurance. Good. But at the time of booking insurance policy, let him at least establish in case of large value accounts, if the location of the factory is shown in the application at a particular place, whether actually factory is existing there. I mean, then you can tell him at that time, look, you have given me a wrong address, and if there is a claim, there will be a huge risk for you, it will not be settled. I mean, it has to be both ways. Insurance products improve, creating awareness about the customers means through these, unfortunately, through these tragedies, you can do this job. But this is what.
Thank you, Mr. Shah, for your valuable comments. I move on to Srini, because Srini, I remember in your time, you had come out with this public disclosure of the claims that we settle, in the claims track, and you're very passionate about it. So I would like to have your views on the comments that we heard from our customer and our banker.
You see, generally in general insurance, every claim, actually the client has undergone mental trauma, possibly physically he has been hurt, and definitely a financial loss. That is why we look at every claimant as somebody who has suffered a financial loss, otherwise they won't come to us. But unfortunately, there is some kind of understanding in this industry that we should not capitalize on other people's disasters. So individual claims very rarely are advertised. Having said that, in Bajaj Allianz, what we did was, let us take aggregate statistics of all the claims. This is what Tapan was referring to. And I think as early as 2005 or 2006, I was associated with that company as a CFO. We started publishing openly statistics, how many claims we settled, how many actually customers had complaints, how many went to consumer court, and how many actually consumer court declared in our favor, how many did not decide in our favor. Clearly, this was very bold and transparent, because this told the customer, look at the track record of this company and how boldly they are disclosing their aggregate statistics. Having said that, individual claims to publicize, now Jammu Kashmir, we are actually sad that so many people lost their property. So we would not want to take advantage of that. At the same time, the fact that the company has come out will eventually, through word of mouth, it will spread. Customers like Majid, for example, he had the vision to actually insure his godown, his house, his property. He is better off than many others who did not have it insured at all. But as you rightly pointed out, over time, people have to realize this is something you learn only from experience. I would not take health insurance if nobody around me fell sick. But the day somebody falls sick and I see that somebody actually had to borrow money to actually pay for an illness, I would think of insurance. So over time, we are hoping that we are doing a lot of work on awareness. IRD has also now started an awareness program. And I think as through our agents, through our training programs, I think all our companies are doing that. But it takes time, because this pinches, when you pay premium, it pinches you that maybe nothing happens to me, what? After 1 year, I would have wasted this money. This is the thinking of the customer. Like you correctly mentioned, if I have only 10 lakhs loan, why should I insure my stock for 20 lakhs, even if it's valued at 20 lakhs? So there is a feeling that this premium is an expense. It is not. It is actually something which you're doing to protect and sustain your future. So I hope this this hangout also helps a lot more people to get aware that a small amount of money, you're actually buying long-term peace of mind. Thank you, Tapan.
Yeah, thank you, Srini. So I move on to my customers and my people watching the hangout. There are a lot of questions coming up. So we'll take the first one from Vivek from Agra. He says, cost of mobile phones, laptops, iPads is very high. Can I get the equipment insured to protect my wealth? Yes, Vivek, you can. I think looking at your query, it looks like you would be a student, young age, who already has all these gadgets. You should look at our home policy, which we have. which take care of covering all these assets. And you can write to us directly, or you can contact our agent and you let us know your number. We'll get back to you and ensure you're covered for this. You can pretty well do that. Harry from Hisar is an interesting question. It says that banks insist to take insurance for the loan amount. Is it good to take insurance on the same? Harry, it's good to take insurance from anywhere. On the loan amount only, it is less, because banks normally don't give loan for the 100% of your stocks or goods. They pay a certain percentage of it. So you should actually ensure that you insure the entire value at the current price, and every year the prices keeps on moving up. I think Milind, our CFO, was mentioning that, and Ashish also mentioned that. So every year you have to be careful that irrespective of the amount, that your loan amount is going down, but actually the prices of your wealth is moving up. So your insurance every year should be taken care to protect that. Because one thing which goes wrong in such cases is there's a clause called underinsurance, which typically means that, let us say, if your property is valued at 100 and you're insured for 40, then something goes wrong. At the same proportion, your claims will be paid. So it's very, very essential for us as customers, as owner of wealth, to ensure that wealth insurance is adequate and properly taken care of. Bankers are the one which typically give you loan to enhance your wealth and set up units and factories, and they have a very good reach in the country, and that's a very good distribution model that we have. So if next time the banker with whom you bank talks about insurance, take it seriously, spend some time with him, understand it. If need be, talk to the insurance people to understand more, but be adequately covered, be protected, be safe. From here I move on to Ratnesh Nagori from Bangalore. What is optimal personal income? Should one invest in insurance? Also, what are essential components in policy to look while buying new policy? I think I have to go to Srini for this one again, because he mentioned in his opening remarks. Just to give you insight, Ratnesh, if you are in a European country, I think there the insurance penetration is very high. Typically, people save at least 10% of their income which they use for buying insurance. That is high. That's one of the highs that we see. And they're very paranoid if they're not covered anywhere. But India, the story is different. Srini would like to comment on this.
Yeah, I think one has to look at the makeup of disposable income and what is the level of income. But typically, after paying what disposable income, I mean the income that is left to you after paying off your housing loan and your taxes and what is available to you to meet your expenses. If somebody is saving in the sense like trying to grow or prepare for the future like retirement and others, roughly 25 to 30% of that they're doing a fairly good job. In general insurance, profile of a person who is having a small car, a family of 4, who has got who is maybe about 32 years old, married, then typically I would think that about 5% of his insurance, with a car and others are asset based, so there is a value given which you must insure for replacement value, because if my car gets lost or damaged, that is fully not recoverable, I need another car. Insurance is not about covering risk, it's about the hassle. If you don't have a car and it takes you another month, first of all, there's a financial loss. If it is not insured, you have to borrow money to buy another car. In the meantime, your whole transport, you have to, there are so many, you'll spend a lot of money on auto rickshaws or taxi transport. So clearly, I would think that about 4 to 5% of the disposable income as a good starting point for deciding how much you want to spend on insurance. Health insurance, unfortunately, illnesses do not distinguish between a rich man and the poor man. Cancer is the how rich or how poor. One has got more money, so he is able to afford it. The poor man actually becomes broke in trying to get well. So clearly, one has to look at a decent amount of sum insured. I would think about 5 lakhs of sum insured in today's context for somebody who is in their 30s would be an adequate sum insured for health insurance, and you have to keep increasing it in line with inflation. So you got to spend a bit more on health insurance. You got to take advantage of tax breaks, reinvest the tax breaks also in an appropriate form of insurance, and you got to ensure that you have car insurance, health insurance, you got life insurance, and you got accident insurance. These are the 4 major, and your home has to be covered. because you have spent a lot of money in acquiring it. You might as well insure it to see that something doesn't go wrong. So this would be a rough rule of thumb that I would suggest: 5% of their disposable income on general insurance, with a greater weightage on health insurance.
Thank you, Srini. I have one question from Kuldeep, which talks about how can I save tax by taking various GI products as an individual. Though Kuldeep, my personal feeling is that insurance should be seen as a pure risk cover and not purchased for tax, because I think the benefit that it offers is huge. But yes, the government does give some tax relief for buying insurance to propagate and to ensure the awareness about insurance goes up and people actually look at it. I'll take this. I'll ask Milind to take this question about what does he feel on this and what are the tax savings which can come through buying a GI product.
Yeah, actually, as far as tax breaks on the health insurance premium are concerned, this is the only product on which government has provided tax breaks. This is particularly taking into account the high cost of health treatment which is required to be taken, and after considering the overall social welfare or the social angle to this particular aspect, government has provided tax breaks in terms of the health insurance policies what you take, and an individual or a Hindu undivided family, if they are opting for a health insurance cover, they can avail tax benefit on a premium payment up to 15,000 rupees, which is available to the individuals. Recently, government has also introduced a facility for I would say the medical checkup, which you can do on a yearly basis, for which up to 5,000 rupees, which is already included in this overall limit of 15,000. So that is also available there. So government is particularly for young people or who are yet to cross their 40s or 50s, who may not be actually feeling the risk in terms of getting sickness or getting hospitalized, all those things. I think government has taken this fact into account and allowed these kind of medical checkups also to be included in terms of this. Apart from this, another important factor which is there is that you can also take care of your parents by taking health insurance on your parents. I think they will be really grateful. They will be really taken care, feel like taken care when health insurance on your parents is there, and a separate deduction of 15,000 rupees is provided for your parents. And moreover, if any of your parents are senior citizens, means over age of 60 years, then there is an additional deduction of 5,000. So overall, if you are insuring yourself, means your own family as well as your parents, you can get a deduction almost on rupees 35,000. So I think that is a very good tax break which has been provided by the government, and I think maximum people should be able to avail this kind of coverage and also take care of their parents.
Thank you, Milind. I move on to the next question by corporate mentioned here is wealth protection is used synonymous with life insurance, which is a long-term contract. How would a short-term general insurance contract product help me in securing my wealth assets? See, if you talk about general insurance, if you have a car, two-wheeler, if you have a home, and in the home you have, let's say, a refrigerator, a television, or you have jewelry, you have baggage. If I read the newspapers every day, I think I always see some accident which is mentioned, or at least 7-8 cases of chain snatching is mentioned, or at least 5-6 cases of baggage getting picked up from railway stations or bus stands is mentioned. All this that you see which is happening and which is mentioned in the newspaper every day, all that has been covered by general insurance. By just taking a couple of products to take care of that, if you take a home insurance, it will actually cover you not only for your building against earthquake, fire or floods, but also your content in that against breakdown of television or refrigerator or chain snatching or your jewelry in locker. No, it will cover you for all that. It will cover your furniture, it will cover your fixtures, even the baggage that you carry when you travel. If that gets picked up, it gets covered, and the premium of it will be a negligible amount of the total value that you're going to get covered. No, but the issue is that at times, rightly said, we are not aware about it. That gets missed out. Or if you have a car, I think a percentage of 2 to 3% of the value of the car, will get it covered against any accident, any hold up happening, or car break happening. So if you see all that protection, no, if you buy a car or home and all the assets in that, it's going to take at least 10 to 15 years or 20 years of your working. A small fraction of the cost of that, if you secure it through insurance, if something goes wrong, it's taken care of. I think that is why general insurance plays a very vital role in wealth protection. Now from there I move on to Mr. Nakashi. When taking insurance to protect major assets like a home or business, what are the precaution things I need to know before paying the premium? Ashish, if you are there, I think you are a customer also in terms of having home insurance. Would you like to comment on this?
Yes. So while taking a insurance, one need to look at it from a perspective what they want to cover. Like say, like I have taken home insurance from Bajaj Allianz. I have my car insured and my health insurance from Bajaj Allianz. So each product one need to look at it, like Shini was mentioning. One has to look at it as a bouquet and look at it in a sense that what all my kind of risk which can occur in my life. Like your car can break down, which can cost you a hassle of repairing it, and you may need to spend money on rickshaws and everything for next 10 days. Similarly, at home, the wealth which you have built over last 10-15 years and you invested into an home, and if you don't have an home insurance, in case of an unfortunate event, you can actually lose the money. And where there you need to really one need to work closely, just like they work closely on managing their money to make wealth. So wealth creation is as good as wealth protection. So one need to look at the replacement cost, how much replacement cost a home will require just to protect on the purchase cost of the home which was bought 15 years. May not give you the enough money because there will be an under insurance, and you may end up with a small money against the loss which you have suffered. Similarly, for a corporate, the loss of profit policies, the fire policies, to ensure that they are covered for terrorism, they are covered for the stocks, like Mr. Shah was mentioning that the loan is covered only for 10 lakhs, and whereas the stocks was 20 lakhs, which can create under insurance. So it needs a proper planning to ensure that we have enough insurance to cover ourselves, our family, and the future. Thank you, Tapan.
Thank you, Ashish. I think the conversation is interesting, the discussion is going strong, but unfortunately, time also flies. I have many questions before me. I don't think we answer them, but what we shall do is we shall answer everybody individually on their email account in terms of the questions that they've asked, so that we take up all of that and we'll be sending an answer to all of you. Now we'll just have a last word from each of our panel members before we close. So this time we start from Milind, and then we move on in terms of what are your last thoughts, Milind?
Yeah, I think in terms of wealth protection, we had quite a few useful insights and discussion about this. What I would specifically like to mention here is that there is a growing factor in terms of the liability insurance, and I think probably many of us may be aware only about the third-party liability, which is for a vehicle. And let me, I think, give you an alert, at least on this third-party liability cover, is that if your car or if your vehicle is not insured at all, even for third-party cover, then you may be landing into huge liabilities, because nowadays court awards are going very high, and as compared to the cost of vehicle, your car may be costing only 5 lakhs, but the kind of liability which may be saddled on you may be 20, 25, 30 lakhs, depending on the person you knock down. So I think liability insurance is coming very heavily now, and there is a lot of realization, there is a lot of I would say probability and possibilities of liabilities being thrust on you. Apart from this vehicle liability insurance, there are also possibilities of various other liabilities which are coming into place, and I think there are many corporate covers available, particularly for directors, officers, professionals, doctors, chartered accountants. So I think in individual capacity, all these professionals should be availing these liability covers and secure that such kind of a event in terms of a liability claim or something which should not disturb their practice or should not disturb their profession. So I think with this, I'll hand over to.
Thank you, Milind. Ashish, any last thoughts from your side?
I just want to add to what Milind is saying. Similarly, on the corporate on the corporate side, one has to look at it from a perspective that what kind of insurance is required to ensure that the business is continued, and to ensure that they continue to maintain their market shares, they continue to maintain their properties, which can ensure them a hassle-free future in case of unfortunate events. Thank you.
Thank you, Ashish. Srini, any last word from your side?
Yes, I think people should realize that over the last 10, 12 years, general insurance awareness is increasing day by day. And we have now many facilities like SMS-based attendance to claims, cashless settlement in hospitals. I think with significant strides in the service side of the business has been made by the general insurance industry. But one of the things I would like to highlight here is that there is significant amount of underinsurance in health insurance. The cost of health treatments is going up much more than national inflation. An operation which may have cost maybe 10 years ago 50,000 rupees probably costs 3 to 5 lakh rupees today. And one needs to plan this across one's lifetime by putting in small amounts of money. Today, the regulation is also favorable. There is continued insurance, you get cumulative bonuses, and your sum insured does get built up over time. So I would strongly look at people to look at health insurance not from what it might cost today, but what it might cost in the future. In future, a single bypass in 15 years' time may cost 15, 20 lakh rupees. And whether people are prepared for that eventuality is something they need to think. But as we go forward, we have got a lot of inputs from Mr. Shah, customers like Mr. Majid, who also suggested that as an industry, we need to simplify our products and make it more easy for people to understand. We will also make all those improvements, I'm sure. And we hope that more people understand insurance and take the right amount of insurance.
Thank you, Srini. Over to Mr. Shah for his last comments before we go ahead. Okay, it looks like there's some connection issue. I move on to our customer, Mr. Majid, for his last word. As a customer always has the last word. That's why I kept him for the last, Mr. Majid. Okay, I think it looks like the time is getting over, so disconnections are happening across. I'd like to close this session by thanking all of you for the wonderful discussions and lovely questions as usual. As a small attempt from our side at Bajaj Allianz General Insurance Company to create awareness, to make you understand that for a small sum, you can protect your wealth, which you create with hard work of many years. Thank you very much.